Hello friends, welcome to IBD Trading. Today we are going to discuss about how to predict the next candle. Okay, I take a trade. I will explain later about this. Okay, before going to that, how to predict the next candle in binary. That is very easy if you understand the liquidity. Okay, if you understand the liquidity, it is very easy. So what is the confirmation? We need confirmation gap. If you have these two weapons, you can win anything in the market. Okay, so basically sometimes in binary what will happen, in binary we need entry point, we need entry point entry point and direction of the candle. That is very important. Even sometimes you will take the call option from here. Okay, you take a call option from here, even it was a red candle, because of the entry point you are going to be win. So that is very important. We are not going to find whole momentum. We need candle. We don't need 100 points. Okay. So sometimes we are going to discuss about today. Sometimes fair value gap need retracement. Sometimes going to directly trade. When we need the retracement, when we need directly trade, I am going to explain now. Watch the video till the end. You will going to be learn a lot of things today. Okay. From where market will retrace, from where market will reverse. To find these things, we need first liquidity. Okay, always we need to find the liquidity, and second thing is gap, fair value gap. These are the confirmations. So fair value gap is, so liquidity is simple thing. This is main. Without liquidity sweep, nothing will happen in this. To find the first liquidity, then you can find gap. Gap is confirmation. Gap is our confirmation. Okay. Without liquidity sweep, you even get the fair value gap. That is not going to be work for you. Okay. And where you look for this fair value gap, why should you look for the fair value gap? Okay, where we can look for the fair value gap, which are the reversal points. We have a reversal points, we have a reversal points. What's the, which is our reversal points? Okay, we can discuss about that first. Okay, first point, our reversal point is first always inducement. Okay, second reversal point is order block, and third reversal point is swing lows. Okay, swing lows and highs, and last one is extreme fair value gap. Okay, extreme fair value gap. These are the our reversal point. This is not a reversal confirmation. These are the not a reversal confirmation. These levels will be work like as a reversal points. From these reversal points, how we can going to take the trades, that is very important. Yes, see now, for example, you always look for the trades from these reversal points, because these level work like as an liquidity levels. So here is the higher high was broken. After higher was broken, this first pullback will be what? This will be our inducement level. Yes, this will be our inducement level. Below you have a order block. Okay, you have a order block here. So what you think here? For example, from inducement level, if you have any gap, that is work. From this order block, if you have any gap, it going to be work. Any gap from here, it will work. Okay, because market sweep the liquidity. These are the liquidity levels. Market sweep the liquidity, so it will work. So it's okay, but without sweeping this, without sweeping this, at least market will sweep this extreme fair value gap. Even it was not sweep this extreme fair value gap, even it was not sweeping extreme fair value gap, from here if you have any gap, it is trap. From here it is going to be trap, it not going to be work for you. So for example, okay, as per our theory, market was mitigated our inducement or any order block, doesn't matter. Okay, it was mitigated. From here you have a gap. From the gap, market is creating the gap. So that means One second, I will draw clearly. Wait for it. From here, market create the gap. Okay. So just because of this, seeing this gap, can you take the trade directly? Market is create the gap here. This is the fair value gap. So it was mitigated order block also. As per our reversal points, it was mitigated all reversal points, and market was created the gap. So directly can I take a directly trade? No. If you do like that, that sometime it will lose. So when sometime market will give retracement, where it will give the retracement. For suppose, see, for suppose market is here. Okay, here is the target. The target was above. M- Target was above. That means swing high. This is the swing high. So in this situation, go for the directly call option. For suppose here is an extreme fair value gap. For suppose you have a extreme fair value gap here. If market reacting from this extreme fair value gap, that means we have to stop there. That is the red signal. Here is the red signal. There is a chances to market will retrace. In this situation, market gives the retracement. After retracement, it will move upside. For suppose there is a no gap. Okay, your target was above. You have a space to create another candle. In this situation, you can go directly trade from here. You can go directly trade from here. Okay. Yeah, still you have, if you want to take the good entry point. If market come down, okay, market will come down if it is reacting from this gap. Reaction means it will give you any reaction from here. So take the trade below the 50% of the fair value gap. It will, even it is close as a red candle, even it was a close as a red candle, because of the your entry point, you are going to be a win the trade. Okay. Even it was after retracement, sometime there is a no gap. Okay, target was here, it was retrace, then you can go directly trade. This is proper trade. This is perfect 100% sure shot. You can go take the trade from here. You are going to be win. For suppose you have a gap here. Okay. For suppose you have a gap here. So if we have a gap here, it must break. If it is not break, we need this must break. If it is not break this gap, that is the meaning of market will reverse from here. So if there is an extreme fair value gap, please wait for the this extreme fair value gap breakout. Okay. I think you understand all these points. Okay, before that, now we can discuss about the rules. What is the rules? You know already, I discuss. First, rules. Rules means first, always I am telling find the trend. Second is always find the liquidity level. Liquidity means reversal levels. Third point, always find the confirmation gap. Okay, wait for the fourth point is wait for the break retracement. Okay, then take the trade. These are the rules. If you follow, you are going to be take the trades very easily. See here what is happening, why I take the trade here. So market is very strongly fall down. So in this situation, market create the gap here. There is a no gaps to stop the market, and exactly coming from the support level. See here, it was exactly coming from the support level. This support level, this is big candle is trap. Okay, here is a big candle, everyone think it will move upside, that is trap. And I have a gap, it was retrace, so it was moving downside. At least it will move down one candle because it was close exactly this support level also. In this situation we need retracement. Why? The target was finished. Now I will take some trades and I will explain. Okay, I will take some daily trades. I will take some retracement trades. I will explain, try to explain every kind of situation for you. Okay. So here is the market is creating the gap. So trend is uptrend from this extreme fair value gap. See, from this extreme fair value gap, market is create the gap. So after gap, it was moving upside or not. There is a chances to retrace. Why there is a chances to retrace? Here is a target. It was reacting. So that in this situation, that's why I don't want to take a directly trade. It was win, but not every time that is not happens. So sometimes it will retrace. So waiting is very better than losing. So wait for the retracement sometime. Let's wait for the good entry. So this is uptrend. Market starting to moving downside. It was if the this liquidity also, but it was if this liquidity, and it is a fair value gap. It was mitigated. after mitigation of this gap, market moving, try to move in downside. So if market creating any opportunity to the trade, let's see. So I want to take a call option from here. Entry point is miss, but see, why should I take a entry point? Previously I said we need retracement. When we need retracement mitigation, if market mitigate any gap, market will create the mitigation. This candle is not mitigated this gap. So this is mitigated and giving the reaction from the exactly from this gap. So I take a call option, but entry point is miss, but no issues. I hope this will close as a green candle above my entry point. See, just because of trend is uptrend, it is uptrend. Here is higher level is broken. This is the swing low. Yes, this is the swing low. That means liquidity. Liquidity was sweep. Here is a gap. After gap, it was mitigated. Mitigation. I will take the trade. Now, simple. So just because of the liquidity, if you find the gaps, everything is possible. Okay. I take a two trades to our win. I will show one more. If market break this level, so that is good confirmation to take the call option directly. Why? Here is a swing high. The swing high was mitigated. That means market will reverse to mitigate this gap. So, and if it is get entry any entry point of below 50% level, I will take the call option directly. Okay, otherwise I will wait for the mitigation, then I will take the call option because of the this swing high was mitigated. Okay, the swing high was mitigated. So I am waiting for the reaction. If I get a market give any reaction, same I will try to take a call option because it will move upside. Already I have a confirmation, but because of this swing high, because of this week, I am waiting for the good confirmation. Okay, I take a directly trade because market not showing any confirmation to it will come down. It will move upside as per my analysis. Let's see last second also it will close as a green candle because see, let's see, analyze the market first. Trend is uptrend. Yes, from the extreme fair, exactly from this extreme fair value gap, market is reversing and creating the gaps. Then market is moving upside, but only one minus point is here. This swing high was mitigated. Still I hope this will be closed as a green candle. Here is the gap was mitigated. Here is the gap was, it was reacting. It will close above my entry point. Let's see, it will as a doji. See, okay, if I get entry point, I will take a call option again. Simple. See, if I enter from below here or here, I am going to be win. That is why I said in binary the entry point is very important. But no issues. Still I take a three trades, two are win, one are refund. So market, if market create any gap from here, this is tradable gap because I will explain. See what is happening here. Market is uptrend, but it is try to moving downside from this extreme fair value gap. Multiple time was sweep, then market try to creating the gap. If it is touch this level, I am not going to take the trade because that is target was finished. If it is close here, that is good confirmation for us. Even it was give any reaction, I will go to take the trade directly. That is perfect entry point. This is also directly tradable situation. I am going to take a directly trade. How this candle will be closed, where it will be closed, that is the decide of the directed trade or after mitigation trade. Okay, so we need mitigation in this situation because it was touch this. Okay, I need mitigation, see, because this was touch this level. So that means there is a chances to market will retrace. So if it is give any reaction from the gap, then only I will take the trade above the 50% level. Okay, it was reacting. Let's wait for this. Still there is a 15 seconds more. I think it will come above the 50% level. Yes, yes, yes. Okay, I enter here, but below the 50% level. If I enter here, that's also good. Still I hope this will close as a below my entry point. Why I take a reaction trade? You know that already. Why? If market mitigate any target, we need to wait for the mitigation trade. If market it not mitigated here, I am going to take a directly trade. That's it, simple. Okay, I think you understand now why fair value gap retrace. Why should we take the directly trade? And one more thing, there is a no gaps to stop. It will move downside. Okay, I hope you like this content. Thanks for watching. Please do subscribe, share with your friends.